In the last module, crime as a form of social deviance was introduced. This module focuses specifically on white-collar crime and corporate crime. White-collar crime is a crime committed by a person of respectability and high social status in the course of his occupation. White-collar crime is characterized by deceit or violation of trust. It does not involve force or violence and often consists of acts to gain money or personal advantage. Corporate crime is a type of crime committed by a corporation, meaning a business entity having a separate legal personality from the natural persons that manage its activities, or by individuals acting on behalf of corporations. Though the two types of crime above are very similar, they differ in who benefits from the crime. In white-collar crimes, individual workers benefit, often at the expense of their employer. In corporate crimes, the company or corporation is the one that benefits. Examples of white-collar crime include insurance fraud, securities fraud. Securities are publicly traded financial assets. Embezzlement, insider trading, buying or selling securities using insider information from a corporation directly involved in the issuance of the security, and public corruption, abuse of powers by a public official, such as taking bribes for personal gain. Examples of corporate crime include environmental violations, corporate bribery, reckless conduct, negligence, and fraud. Recall the articles on Martha Stewart and Lockheed Martin from your readings this week. What type of crime was committed in each case? The FBI estimates that white-collar crime costs the U.S. $300 billion a year. This is greater than the financial loss from burglaries, robberies, and larcenies combined. White-collar crime is a crime generally committed by those that are from higher social classes, while burglaries, robberies, and larcenies are typically committed by persons of the lower socioeconomic classes. Though most of the financial cost of crime is due to white-collar crime, Americans typically don't think of white-collar crimes when they think about crime in the abstract. This may be because it's harder to see the direct damage of crimes like insider trading. How are white-collar crimes so costly in value compared to burglaries, for instance? Though there might be more burglaries in a given year, the average burglary is for less than $100. However, it is not uncommon to have many embezzlements of over $1 million reported each year. Corporate crimes are typically very costly as well. Large-scale crimes committed by corporations, investment trusts, and public utility holding companies are often over $50 million in value. Unlike other crimes, white-collar and corporate crimes tend to have many victims. For example, Bernie Madoff was convicted of defrauding thousands of individuals and organizations out of billions of dollars in 2009. There are also hidden demoralization costs. After large crimes are discovered, like Madoff's phony investments, public trust is eroded in the financial sector, which damages the economy as individuals and institutions become less likely to provide loans or invest. Despite the terrible impact created by white-collar and corporate crime, it is very common in modern society. This is due in part to the absence of effective penal sanctions for white-collar and corporate crimes. Madoff's harsh sentence, 150 years in prison, is not at all typical of punishment for these crimes. In general, relatively few individuals or corporations that commit these crimes are prosecuted under the criminal law. Most white-collar crimes receive civil hearings, and most corporate crimes result in regulatory fees. These penalties are not very harsh and don't seem to provide enough of a disincentive to potential white-collar or corporate criminals. One of the reasons corporations were invented was to limit the liability of the individuals that own and run them. corporations have many of the rights of individuals. When it is determined that a corporation has committed a crime, individuals are not typically held accountable. Instead, the corporation is found liable. Because corporations are not physical entities that can be put into prison, punishment usually consists of fines. Critics note that there are problems with only using fines to punish corporate crime. Often, innocent people pay for the crime as well as the guilty. Many publicly traded companies that commit crimes and pay fines are owned by the average citizen who has money invested in the stock market through their retirement accounts. The fine costs these individuals financially. It also costs many of the employees that may not have had anything to do with the decisions that led to the crime. They can lose their jobs if the fine causes the company to go bankrupt, or receive pay freezes or pay cuts. Another criticism of using fines to punish corporate crime is that the fines often don't have much impact on a company's profit. Many of the banks and other financial institutions that engaged in fraud prior to the economic collapse of 2008 have been fined for their criminal behavior. However, many of them made so much money from their crimes that it was still worth it after the fine. In fact, Standard & Poor's, a financial rating agency, recently settled with the Justice Department for over $1 billion due to their fraudulent activities in the time leading up to the collapse. Though this sounds like a harsh penalty, S&P profits close to $3 billion every year, and likely earned well over $1 billion from their fraudulent behavior. If a company can earn $5 billion engaging in fraud, and the risk is that they may have to pay a $1 billion fine if they get caught, it makes business sense to engage in corporate crime. Fines become part of the cost of doing business. Many corporations break environmental laws because it is cheaper for them to pollute the environment than to run their business in a more environmentally friendly way. After performing cost-benefit analyses, in which environmental fines are factored in, corporations might decide that the crime is worth the penalty to them in terms of profit. We will discuss this more later.